Cool, awesome. Wow, you done really well. I love that. So yeah, um, you need to be able to filter the traits. So I can see that you are filtering the traits nicely. And Amphenol Broadcom, really nice. Yeah, it'll be nice to have 10 of them. Yeah, and so you know exactly what is good to buy. So let me just recap it back. The reason why we buy these stocks during extreme fears is when we're going through the the we're going through the filters. Let me just go through the filter with you again. You have to memorize this filter, yeah?
Yeah, so
But
I remember the filter. So we used the technology on Finways, and then we went like the revenue has to be like over 30% this year, and also EPS over 30%.
wow, really good. So very
Yeah.
good. So let's try it. So you can go to stock screener. Yeah. Now, in terms of the filter, we can use exactly what you say. We kind of want US if you can.
Yes.
Sector wise, I will go for
Technology, information
yes.
technology.
Yeah, informations and communication services, these two.
Yeah.
Yeah. And
Yes.
financial is okay as well during low interest rate time. Yeah, so this two is nice.
Sure.
And then once you've done that, you want the P to be how much?
Um, Sorry, what
The
particular
P,
metrics you're
the
asking?
P value, the PE, how much to be more
Oh,
than zero?
P
Remember?
PE more than zero. Yes.
Yeah,
P more than
because we
zero.
want it to be profitable, really nice.
Yeah.
And then we want the growth, exactly what you said. We want the growth to be, let's say, if they have
Yeah.
next year, let's do like
Over
30.
30%. Yeah.
Yeah, there's revenue. We want at least like 30. So let's see what happened. You can play around with this. So we have around 25 companies here.
Yeah.
Yeah. So they are quite a nice company. We have Iron, 1000%, Nebius, Digital, Cradle, CleanSpark, Lumentum, Micron. So out of these 25, we usually will recommend students, NVIDIA is here, and Marvel. We recommend students to study all of these 25 companies carefully. Just
Yeah.
you want to be able to understand in one word, in one sentence, able to explain to a 5-year-old what they actually do. Yeah. So
Yes.
make sure their guidance next year or the long, keep on increasing. Okay. So
Sure.
you found five. That's really good. And those are the one that we are gonna buy. Let's say extreme fears happen tomorrow. Straight away, you will use the link on your email to book a one-to-one. So we place the trade straight away then. Okay. During
Okay.
extreme fears. That's what we're gonna do on this training. Anytime during extreme fear time, you automatically just go to your website, go to your email, and just
Yeah.
one to one. So we put them into practice like that. Yeah.
Sure. Perfect.
Um. Yeah. So they do some live trades like that. Okay. So that's really powerful as well. So it's good that I think you know how to plot the graphs. Let me see if this is actually guidance. Unfortunately, from what I can see, do you
Yeah.
guidance? Let's have a look. So revenue is expected to be 2-3. Okay, this is guidance. So on the graph, when you plot, that's what we
Yes.
want, yeah? We want the guidance. I think you are plotting the one that already happened. Let me have a look. Two, two.
Yeah. Yeah. So I put the result, what happened actually.
Okay, the result is okay. It will be nicer to put the guidance in, okay? Because we
Okay.
are comparing, we want 30% based on the guidance. They are thinking that, oh, you know, the difference is 30%. Yeah. So what I'm
Oh,
trying to,
okay.
yeah. So let me just be really clear so you
Oh,
understand
okay.
what actually happens. So how do I actually make a lot of money? Is that during the extreme fear time, the extreme fear, we will be selecting stocks year over year that increase 30%. Okay. You
Yeah.
can have the result, that's fine. We always guidance is always even better. So when you plot the graph
Okay.
on guidance, that's what happened. Yeah. And
Okay.
also every Tuesday when you come, you kind of have to find trades that increase or decrease their guidance by 10%,
Yeah.
quarter to quarter and stuff like that. So you submit every Tuesday, and before
Yes.
you submit it, you place it on your platform first, depends on what level you are on, but just place it on any platforms that you got, so you get to see the result by the time we discuss them on Tuesday.
Okay.
Yeah.
Okay.
So
Yeah.
that's kind of what happened. And while you are doing that on Tuesday, you also continuously trying to find guidance that increase 30%. So you put on the watch list. So you have at least
Okay.
10
So
because
just to clarify this, Revan, just to clarify this, so every time I see press release or like quarterly financial details, I need to go to the Outlook. Yeah, what is the Outlook for the yeah, and then look for the guidance there. Not
awesome. Really,
yeah.
really good. You're
Okay,
absolutely
sure.
right. Yeah, really good. Yeah. So that's why every time you go to the guidance, sometimes if they don't have the guidance, then you can use the past numbers. But we usually just want the outlook. We usually just want the guidance. Yeah.
Okay, sure.
Cool. Cool. Yeah. So you found it and then you submit on Tuesday and we go through on Tuesdays as well. But before you submit on Tuesday, you kind of already, do those trades so that you get to see the result after as well. Yeah.
Okay.
So that's kind of what happened. So which is really, really good. Let me just think. Okay, so because you only have five trades on, so that's fine. You continue to
I think
find
six
those
trades. I
10
have
trades.
given
Oh,
six
yeah, six
trades.
trades. That's really, really good. Let's have a look. Oops. So you have six
The
trades
thing
on.
is, when I saw the video, the first apprenticeship training video, so there
Yeah,
was like 10 scores on Finways, but I just thought, okay, I've done six, but let me just check with you whether I'm on the
that's
right
good.
track or not.
Yeah,
But just
that's
like to
good.
see,
Thank you.
and then
Yeah,
I will
sounds
do
really,
yeah.
really good. I think you're doing the right thing. Yeah, it looks really good. It will be nice. You're right. Just to do the guidance there. Okay,
Okay, sure.
just to do the guidance there as well. Yeah.
Yeah.
Cool. So, yeah, that's really good. Let me just see one or two.
Can I just quickly ask you a very small question here,
Oh,
about the homework I've done? So while I was just checking PE ratio for all these companies, so
nice.
I understand like all the metrics like they're over 30% year on year growth and things like this. But for example, we talk about PE has
Low
to be
PE.
down and things like
Yeah.
that. Yeah. So these companies are with a high PE.
We
How
don't
do
care
you
about
see
the
this?
PE. On these growth companies, on these strategies,
Okay.
and we don't actually care about the PE. We just want it to be profitable. Because
Okay.
the thing about PE is that PE is just price over earnings. So they
Yeah.
didn't take growth into consideration. So in
Okay.
order to take growth into consideration, the PE has a different formula. If you remember, what's the formula? I think it's 8.5 plus do you remember the formula for the PE? Let me have a look.
For PE.
Yeah,
Yeah.
there's a formula for a PE. Let me have a look. 5 plus. Just give me a second. Yeah, it's 8.5 plus 2 times annual growth rate. Okay, cool. So let me just
Okay.
write it down for you one more time. So if you are really worried about, oh, the PE is so high at the moment, literally,
Okay.
for PE, the true PE of a stock is just 8.5 um times 8.5 times 2 times annual
Annual growth.
growth rate. Yeah. So for
Okay.
example, let's look at Nvidia or Tesla or anything. So Nvidia, we use 8.5 times 2. So you found out what is the growth rate of Nvidia. So let's have a look.
Okay.
So you go to Finviz, you should be, let's see. So go to Finviz. Sorry, it's the Nvidia. And yeah, it's around 50. Yeah, this year is around 50. Next year is 40, 36. So make it easier, just 50. So
Okay.
the P of 50, let's have a look. 50, now it's 51 for kind of Nvidia. 51, 42, 36. So you choose the one that is acceptable. I'm probably gonna say only three divided by this plus next this year, next year, 5 years, 50, 42, 36. I plus everything together, I divide by three together. So probably around 40. So
Okay.
so 40. So Nvidia right now, 8.5 plus 2 times 40 is actually
It's
80, 85.
88.5.
Yeah, 88.5. So it's actually quite undervalued right now for Nvidia. Yeah, because the growth rate is a bit high. So Nvidia is actually not too expensive. But if you go to Tesla, for example, 8.5 plus 2. Tesla growth rate will just be, let's go Tesla, will just be negative 27, next year 41, next 12 year 12. Just to make it easier, some other websites going to give you different numbers. Just to make it easier, I'm probably going to say around 15. I plus everything and
15.
divide by 3 together. So
Yeah.
60, this is 50, 50 minus 10, 10. Yeah, it's around 10.
Yeah,
So around
10.
10, yeah.
Yeah.
So Tesla's supposed to be selling at the PE of, let's say, 28.5.
28.5.
Yeah,
Yeah.
which is right now selling around 251. So that's a bit more expensive. But let's go
Yeah.
to Credo, for example. Credo, the one that you did.
Yeah.
Credo is around 193. So I
Hmm.
use 8.5 plus 2 times 193. I plus everything divided by 3. So I plus everything 100 plus 20 plus 6. 80 and then probably 300 divided by 3. About probably 100%. Yeah. Probably
Yeah.
100%. So if I plus everything, probably around 200 PE. So Credo is selling around 196, which is around 200p. So that's kind of okay. So what is the conclusion? The conclusion is we for this strategy, so there are three ways to make money. Okay, there are three ways to make a lot of money in the market. The first way is when during extreme fear time, we choose some high growth stocks. That's a
Yeah.
30%. That's when you want your money to increase fast. The second way is almost any time almost extreme fears. So you buy stock that is lowest historical PE ratio. This is like Google, this is like Facebook, this is like UNH some time ago, all of that. So you buy stocks as a very low PE historical ratio, and hopefully they have
Yeah.
growth rate of at least 10%, so it's not too slow. Yeah, that's kind of the second way to kind of to make. But the first way is a lot better. This even the second way you buy an extreme fear is also quite good as well. Yeah, like we have this on Google. Google historical PE ratio. It just happened this year, and it was at the bottom here. Can you see the lowest that you have?
Yes.
Usually Google is like 23, all of
Yeah.
that. And then in April, we got a really low one, which is just around, let's see, it's just moving at the moment. It's the bottom here, probably 17.22. Yeah, just around
Yeah.
17, which is the lowest that we ever seen. Magnificent Seven stocks, if you get PE ratio of lower than 20, it's a steal already. Yeah, lots of our
Yeah.
students go into it and they go up big time. How much it go up? Around 80% like that. Yeah,
Hmm.
so that's kind of happen. So you buy those at a really low PE ratio. That's just to answer your question. So let's go back to our filter. So yeah, so you're asking me about the PE. Yeah, just to answer your questions about the PEs as well. So it's okay. Um, PE is yeah, PE is just a way to make sure that things are actually for growth stock. We just want you to make sure it's actually positive. Okay,
Sure. Yes.
cool. Now, um, so yeah, so let's see. So yeah, so these are the most 10 important stocks. So as we talk about on Tuesday, when the markets go undervalue by 10%, that's where we
Yeah.
start to put money into them. What's the website called? When the market goes undervalue, let's see, I think it's here. Market valuation number 8.
Yeah. It's from 3.2 is changed to 1.8, 1.9. I checked this morning,
Awesome,
like
awesome. So
1.2.
you know exactly what we're talking about. So I look
Yeah,
so
yeah, yeah.
as long as it's negative here, then
Yeah.
wow,
Around
you
negative
can
10,
sell your
yes.
house and you can go all in.
Yeah. I want to mention that when I start watching your video and I paid the first installment, that was like end of March or something. And I was
Nice.
watching a lot of video and I was doing the homework and stuff, but because I was new and stuff, I feel like, I feel so bad about this. I missed that April 8 and April 9. Like end of March, I knew the market is going to drop because you were talking in the meeting and things like that. But because I was not one to one and stuff, Yeah, I just couldn't take benefit of that during
Which is
April
very,
9th.
very normal. Yeah, which is very normal. I get completely where you come from because
Yeah,
normally students will make use of this after they miss it.
yeah,
So because
yeah,
they already know, because they are learning, they get experience. So yeah,
yeah.
they will normally will start using this after they miss
Like
opportunity
so
like
many stocks were like so undervalued, like Nvidia like gone to 93, like like peaks,
exactly. You remember, yeah,
like
Nvidia
Tesla gone
was
220 something, and stuff.
yes, yes,
But I think what the benefit has been, like, when I'm using the Tuesday calls and stuff, and then everything we talked about, like the homework from different people and stuff, then I do my own analysis and, like, like on a free time and stuff, and then make, like, check the PE ratio, the stock, like, the real valuation for PE and all these things. So I do make those trades on eToro, like, for example, but I'm getting benefit of that, but it's just like very small. Like, it's still positive. It's like,
yeah,
again, like, I can see
nice,
those successes there.
nice.
But yes, I would like to know how to do like leverage and all that
Yeah,
thing.
yeah, definitely, definitely. Yeah, at this moment in time, because markets are a bit overvalued at the moment, as you say, people are really being trapped at the moment,
Yeah,
and it's actually a very, very yeah. So as you said, people really get killed in the markets when they use a lot of leverage here without you know this is a market at the bottom no one wants to use because people are all scared. So this is actually not the right time to do it. This is actually when you want to do it for fun. You do it to learn some lesson. You do it to lose money when it's at the top. Yeah. So at the top here, we normally don't do anything. We literally just do it, just to learn some stuff only as a thing. Yeah. So but when things comes at the bottom kind of later on, a lot of the trades that we recommended, we are going to use some leverage at the main time. We're going to use some go to live trading. We're going to use some leverage so you can actually see how things actually do it in a nice and beautiful way. Yeah. So there are three types of leverage, just to cover the leverage a little bit today. So that you can prepare yourself, you can practice in your demo account. I really recommend students to practice in their demo account first. I know you make some money already on real money, but it's good to practice in your demo account, especially when you just first started, especially when the markets right now are a little bit overvalued. You can see, markets are literally, at all-time high. Every time it went up, it's actually not going up anywhere. It's just really, really all-time high. It's really, really expensive at the moment. The markets, at all-time high.
yeah,
So what is really, really encouraged to do is yeah, it's as you say, to change our life, we just need one really nice time to change our life forever. Yeah. So
yeah,
so no matter what capital you start with. Now, what I'm gonna do, we're gonna cover some leverage a little bit, just so that when the market comes, so you understand how things actually kind of work. So the first way to make money in the market is where you do a normal share dealing platform. Yeah, a normal share dealing. You use X1, which is no leverage. This is like your ISA account. This is like your trading, your invest account. You're not using ISA, so there is no daily charges or anything. And most of the time, it's also quite tax free. So that's the first way to do it. Where when the time comes, you're not so sure whether the market is going high or going low. So that's normally what happens. We use share dealing when markets is at extreme fear or fear time. Okay, these two markets we normally do share dealing because we never know what's gonna happen. So that's quite not normally what happens. And then the second type is also called share dealing, but they use the word X2 leverage, X3 leverage. So if I go on IG or you go to trading 212, they're gonna like SP 500 X2 leverage. Yeah, you can say X2, X like that, and then sometimes the X3. That's just mean times three. Okay.
okay,
Winning you times three, losses you times three. So that's just the tricky part. You only do this during extreme fears as well. Extreme, oops. You really do this during extreme fears as well. Yeah. This is like extreme leverage. This is like um if the market doesn't move for this, you're gonna cost some money as well. So there's a daily charges there. So even if the market doesn't move, you're gonna cost some money. So the problem with holding this type of things, if you're holding when the market is in the middle, is expensive, is not so good because if the market doesn't go up massively. then you are then you is you're not being very profitable. Yeah.
Okay.
And the third way is what we call leverage now, where on eToro you can use X2 to X5 kind of leverage on eToro. Also, you only do this when we are actually at extreme fears as well. At extreme fears, and market is actually undervalued by at least 10 to 5% undervalued. Yeah. That's when you actually start doing this. And you can also use spread bettings as well. Yeah, you use spread betting. This is on IG. Yeah. And the last part about that is that also we can do this as well. We call it as a leverage. We call it's as an option trading. Yeah. This you can actually times 100 times. So if the market went up like 1%, you actually make 100%. This is option trading. Okay, I'm gonna cover a little bit of option trading here. Just so that you got a clue that we really use option trading and what's the difference. There are different types of so many types of trading. So the first advantage of this trading is that the first share dealing you will never lose money. You almost never lose money if you're being patient enough. You buy anything. We normally recommend students to buy this. This is like a dollar cost averaging it. You're not gonna lose money. It's very difficult to lose money, and you also very difficult, yeah, very difficult to kind of lose money. And we normally, yeah, you can do it on a field time. You can dollar cost averaging in a monthly manner onto your VUAA, onto your QQQ and stuff like that. You're not going to lose money overall. Eventually, you're going to make big money. This share dealing, you have to go to extreme fears because you can lose money on it if the market doesn't move. You will lose money on it. This is X3 on SP 500. And the eToro and all of that, this one you can actually lose a lot of money. These two you can lose a lot of money. But leverage on option, you're actually not going to lose so much money. I will show you why. This is a very limited loss. These two, if you didn't use stop loss, if you didn't go to the way that you want, you can actually lose quite a lot. But option trading is actually quite a limited loss. I'm going to go through this very quickly. So first of all, let's say if you do a call option. If you do a call option, that means we make money when the price goes up. Okay. So we just buy a call option. And another option is called a called a put option. So you make money when the price comes down. Okay. It's just a different name. Call means buy, put means sell. It's just a different name. And this type of options is that the only tricky part here is that in options, they will give you a time. You have to select a time. Yes, you have to select a time. So at the certain time, if the market doesn't go up by that much and the stock still doesn't move, you lost that option. Okay. So for example, what happened here is that let's say you spend, I don't know, £100 on an option, so you buy a call option on, let's say, SP 500, like Tesla, like Nvidia, like Credo, like Duolingo, Palantir, any of the stock that we are talking about. So let's say you bought a call option there. So if you bought a call option there, so what's gonna happen there is that you will, let's have a look. So the profits will be like that. The profits will be like that. We call it kind of like an unlimited profits. If the market goes up 100%, 300%, you keep times, then your profit is unlimited. And the losses is actually very limited. The losses is literally how much you spend to buy that option. I will show you a live trading account to show you how it works later. That's gonna be the that's gonna be what? That's gonna be your limited loss. Okay. But if you do a normal CFD account or a spread betting account, is like this. So you can make unlimited amount of money, but you can also lose unlimited amount of money if you're using normal spread betting. Because if the market goes up by 100%, you make 100%. If the market goes down by 100%, you lose 100%. That's on the normal spread betting or leverage. So why options trading is can be a good thing is because let me see. Okay, let's have a look. Let's say if I go on spread betting on this instead. Mm,
Yeah, I want to check with Ferrari also with you.
Let me see how much it went up. So if it went up by, so if I get into one, how much would it be? Let me see. It will be 7,000. One, it was from eight. It's around 1,000. Okay. So the tricky part about getting into Ferrari, for example, if I use a spread betting account, if I use a leverage of one, that's just a size one on IG, from yesterday to today, it went up 1,000 point. So I will make around £1,000. But in order to make £1,000, I have to put £7,000 in. Not just that, what if it comes down? I will also lose some money. I also lose £1,000. So it's not very good because I make £1,000, but I have to risk £1,000. I have to put so much deposit. So it's not so good if you use a normal eToro leverage or spread betting leverage. But if you use an option leverage, you spend £1,000. So if I use a leverage of what's that called of Ferrari, so I spend £1,000 to buy that option. Just for example, just give you an example, but I can make quite a big profits, and the biggest loss that I will lose is literally just £1,000. If I spend £100, the maximum I'm going to lose on that is just £100. Yeah. So that's just the difference of it. Just so you understand. So let's say Ferrari live chart so you can see. So let's say Ferrari doesn't go up immediately. It went down first. If it goes down first, like as much as possible, and then decided to go up later, if I do an option trading, as long as I still hold that option, I'm gonna make money. Okay. But if I use spread betting, if I use what's that? CFD on eToro, no. If it comes down here, I'm done already. So I don't have a chance to come up here. So even though it comes up back here, I'm done. I repeat. So you
Yeah.
completely get what I'm saying, yeah? So I'm
Yes.
gonna say it one more time. On the CFD platform or a spread betting platform, if the market goes down, if I buy Ferrari, market continues to go down,
Yeah.
halfway through I will be done because the losses is accumulating.
Yes.
But if I use option trading means as long as my money is higher than what I bought at a certain time. So if it goes all the way down and eventually before it expired, it went up, I will still be making money. Yeah, I will still be making money. So that's just a great part about options trading because you have very limited loss. Your loss is how much you put in, which is £100, £1,000, whatever you said already. But the for spread betting for leverage, it can have unlimited losses. Okay, you have
Okay.
unlimited losses there. So that's why we're actually going to the option trading for students on a higher level apprenticeship training. But let's continue. So do you know how the normal leverage works on CFD and spread betting? It's quite straightforward. For example,
Yeah. I've done actually, being really honest, I've done on eToro actually.
yeah, if
Um,
38 comes to 36, if I put £1 per point, the difference is 2,000. I will lose 2,000 or I'll make 2,000. Make sense?
yeah, yeah,
Because
yeah.
come from here
Yes.
to here. Okay, that's
Yeah.
very, very normal. Yeah,
Yeah.
that's okay. That's dangerous because what if it doesn't go? But on option trading, two things we need to be careful of. First, you want to make sure the stock is gonna go up, but make sure your stock also gonna go up according to the time. Because when we buy option, we want the time to be there. So for example, if I give you like if I buy an option for 3 months, for example, or for 1 month. So normally when you buy it, you have to look at seasonality. You'll be like, okay, in this 3 months time, if I buy it, is it gonna go up? In 1 week time, if I buy it, is it gonna go up? In these 2 weeks time, if I buy it, is it gonna go up? When is the next earning release? Should I buy it to cover the next earning release so there's a big jump, or should I not buy during the next earnings release because I don't know what's gonna happen? So you have to think about the time. But on normal spread betting and CFD, you'll be like, oh, every day you're looking at it. Should I close today? Should I buy? Should I not sell today? But on options on what? Let me think. Oh yeah, options you don't have to. You have a certain time. So before you buy, you already want to think about how it works. So let's have a look. Oops. Let's see images. I'm gonna explain images for you. Cool. So just so that you completely get what I'm coming from, you don't need to know these. You don't need to know these.
Um, just a quick question on this option buying.
Yeah. Yeah.
Um, so imagine I put like extreme fair like end of
Yes.
October
Yes.
and I buy it, and then I know, for example, like mid of December or something is gonna be like greed like or something is gonna just drop or whatever. But if I have imagine if I put like for January or something, but then can I close it in between if I have huge profit in December by December? Can I close it? The option buying
So you want to close halfway?
halfway. Yeah,
Yeah, you can.
you can. Okay.
Say that one more
Okay.
time. Say that one more time. Ask the question one more time.
Yeah. So for example, I buy the option buying like end of October at extreme fair.
Mm.
Okay. And I'm looking the historical trend. As you said, like, you want to buy till guidance for the next quarter and something like this. So
Yes.
imagine I put the time for 3 months, but
Yeah.
I have like a good profit by mid of
Yes,
December or
you can
something.
get out straight away. Yes,
I can
100%.
get out. Okay.
Yeah.
Okay.
Good. Very good. Cool.
Okay.
Yeah, you can get out straight away. When that kind of happen. Yeah.
Yeah.
Cool. We actually recommend you to get out as well if you think it's gonna come down. Yeah,
Yeah.
later on. So in options, like you have the different strike price. So option they will give you different, like what is strike price? Strike price is a different price. Like Nvidia right now is 1,200 US dollar per share, for example. Yeah.
Okay.
Yeah, for example. So option they will give you a different numbers, okay? Different numbers like 110, 115, 250, 125, 130. For example, like that. So if we're gonna buy, okay, no need to for this. This is a bit weird. Let's see. Yeah, this is what I was talking about. So when you are making money, you're making a lot, but the losses is very, very small. Okay, the losses
Sure.
are very small. I just want you to know
Yes.
about call options and put options. There's no need to know anything else because there are actually a thousands way to trade options. So we're just gonna do two ways: buy and sell. Okay.
Sure.
So let's look. So the profit and loss, how much money you're gonna make is how much you bought, how much you sold, option premium plus the contract. So yeah, how much you sold, how much you bought, and the option premium. Okay, let's see. I will show you really go to your platform to see to show you how to actually do it. Um, okay, option trading on IBK. Do you have IBKR as a platform? Interactive
Um,
broker? No. Okay,
yes, I have that, yes, but
yeah, you can open
I
the
haven't
demo
used
account
that
on
much
this.
like that one.
Okay, okay. It's a bit complicated to use this platform, but you can use a
Yeah.
demo one on this as well. Yeah, you can use a demo one on this. How do I open demo? Have a look. Log in. Let me open a demo. I'm gonna log in a little bit. To So the way it
So
works is, yeah. So the way it works is, let's say I like this. I'm gonna click. Let's say if I click like Ferrari, let's see what happens.
so is this account you use for option trading, by the
Yeah,
way?
yeah. I like. Oh, yeah, yeah. This is a good account for option trading. You can use Robinhood's as well. What else?
Okay.
Do you find anyone else give you option trading account?
No, I've never tried option trading. So like it's
Okay,
good to
let me
know
show
this
you
one
now.
because
Yeah,
I
let me show you now.
opened
So
it.
yeah, nice. Go interactive broker. Robinhood is nice as well. Interactive broker. Then you type the companies that you want to look at. For example, let's go Ferrari for a second. Race.
Okay.
So I'm gonna click. There are a lot of things to choose from. Let's just choose a New York Stock Exchange one. Okay, let's just click on
Yeah.
that, and then let's just click stock first. Let's see what happens. Yep. So this is a normal stock account first. I will show you option later on. So this is a normal stock account. You can see we bought just at the bottom here. And the reason why we bought is, the P could be quite low and just literally just do it for fun. Yep. It's not extreme fear yet. So just do it for fun. It's at the bottom and people are hating on this because they have a new EV cars, and the EV cars is not very good in terms of the guidance because the government removed the EV credits. Yeah, so it's just because of some news where Ferrari stock went down. Okay, so
Okay.
and the P ratio of Ferrari was quite cheap. It's around one of the lowest it's ever been. It's not the lowest because it's not extreme fear. So we just do it for fun. So it says at the bottom here, and yeah, just at the bottom. So this is a normal share dealing. If I bought a normal share dealing, you will see if I bought a normal share dealing and I have to spend 10K, for example, this is a normal share dealing, and my total return is around 3.52%. So I make around £400 like that. Yeah. So that's a normal
Okay.
share dealing. But I do an option trades as well. So if I go to option here, there's an option. On your phone, they have options as well, but this is just laptop. I go on option. Let's flew. What is this? So when you choose option, the first thing is you want to choose the date. There's a 17. So do you want to hold it till 17? Do you want to hold it till 31st? December, February, May. So you have a date for you to choose from. Okay. So you
Okay.
choose, look at the dates are all very different. Now, the price is 389 right now per share for option, pretend, yeah? And
Yeah.
the price right now, you can see is 389. So that's just around there. So if I want to buy a call option, look at it carefully. So if I buy a call option, and the ask is buy, bid is sell. Okay. How do you know? You have to memorize that. It's very difficult to know. But ask is buy, sell. So it's the same thing, buy or sell. Okay. Sell it says here, buy it says here. So when you want to buy the options, you will be like, oh, which one should I choose from? There are so many strike price. You can see 389. There are so many strike price. Which one should you choose from? So let me just draw it for you so you completely get what I'm actually talking about. So when you buy a call option, if I buy an options of 400, that means this guy needs to go above 400 for me to make money. If he goes above 400, I make money. If he doesn't go above 400, I lost the contract. I lose money. Okay. So
Okay.
this one contract is 250. So 2.5 you have to times 100 because each contract has 100 contract. Each option has 100 contract. So 2.5 is like £250. Yeah, something like that.
Okay.
So, or if you want to buy a cheaper one, it will be 0.75. There will be $75. So you will be losing $75 if it doesn't go above 410. So you have to go to your chart and actually think about, is this guy gonna go above 410? If it goes above 410, you make money. If it doesn't go above 410, you don't make money. You will lose your $75. Okay? This is $30. So which one do you choose, Raven? And I normally go for this one. So for example, you don't want to go for this one because this is very expensive. You'll be like, oh, why don't I choose a 390 then? Just choose a 390 because it's quite expensive. This is 360.
It's not
860.
860.
Sorry, yeah. 860 is like £860.
£60. Yeah.
Yeah, or dollar for this one contract. It's quite expensive. It's like three times the
Yeah.
price of this. Yeah, so if I lose, I might lose like that. But I might, just get a normal one, 250, so that if it goes above 400, it only a few points to go 400. Or what about the 390 one? 390 is okay, but it's yeah, it's be expensive contract. So normally usually people just go on that. Because at the end of the day, to make money, you want to you want to go above 400. Also the profit has to cover this 250. This is like your premium. This is like the price that you spend to kind of to pay. Yeah, I'll show you the graph exactly how it works so you can see.
Can
So
I can I ask you a very quick thing here,
go
basis on
ahead.
this example? If I choose 400, imagine,
Yeah,
and the price goes to 405, for example,
yeah.
like and I paid 250 pound for that, how much profit I'm making? What I'm getting out of, if the
Good.
limit
So
was 400 and I made
if it goes
405.
to 405, for
Yeah,
example,
yeah,
and minus 400, so your profit will be five.
yeah.
5 times 100, you will make around
Okay.
500. Okay.
So
500
250 on my investment, yeah?
exactly minus the 250, which is how much you
Yeah.
paid, something like that. And
Okay.
I'll show you the real calculation kind of later on. And
Yeah.
so you can kind of see it in a proper way. Let's have a look. Let me
Okay.
just see, 250 is a strike price. So yeah, so it has to go above that price. Okay, let's go back just to show you because it's nice to see the graph. So option trading profit and loss calculation on call buy. So I'm gonna go to images so you can see the beautiful graphs. So yeah, so this is a graph as we talk about. So let's say you have two 400 and 405, for example. 405 will be kind of like here, 405, and your strike price was kind of like, is it long? Yeah, was kind of like 400 there. So you minus there, and then you minus your premium again. But I will show you some proper example. So let's go back to that graph one more time. Where is this? Yeah, cool. So yeah, so let's pretend we buy these 255. Let's pretend they buy, they show you very clearly here what happened. So let's say if I bought here, they will show you how much you're gonna make. So you will lose 301 pound. Pretend if you just buy one, break even is 400, maximum return is unlimited. Or even what do you mean? Okay, let's have a look. So I buy one call options October 17, that's the expiry date. If this guy doesn't go above 403, you will lose money. Okay, you will lose the 300, 250 or 310 pound.
Yeah.
However much you spend to buy the option. So 400 call, 400 is the strike price. So buy one contract, October 17 is the expiry date, 400 is the strike price. Break even is 403. It has to go above 403. So let's see a little bit more. So it shows you the graph here in a beautiful way. So your losses is like 255. It will be like, oh, where is this 255 coming from? Because the call options of this is it's around here. Pretend it's 255. Yeah, 255. One
Yeah.
contract is 255, 265, for example, 255. That's why I times 100. 100 is over 250 pounds. So if I buy this, I will lose 250 pounds. But if I make like that. Yeah, quite unlimited profits like that. This is a profit and loss. There's a lot of things to like, there's delta, there's gamma, there's vega, but at this moment in time, you don't need to know any of that. You just have to remember, if you buy a call options, you kind of a certain time you want to go out as much as possible, and the loss that you lost is quite limited. Now let's say if we order this, let's see what's going to happen if we order that. So if quantity, we choose one, and then they'll ask you what limit order. Market is when you want to buy now. I always recommend to do a limit, so you get to choose. The price line is 2.5, so you just put 2.5 there. Okay, because if you put the market, sometimes you can choose like three, crazy.
Okay.
And 2.5 is the difference between us and that, okay? And then 2.5, so here is 2.7. 2.5 is like you will spend, if I choose 2.5, let's see how much we're gonna make. Preview, there's a preview, so you can see how much is gonna happen. So 2.5, I will be costing 250 pound, and that's just how much is the cost. Okay. So let's
Yeah.
calculate some profit at the moment so you understand. Because I already bought this, so we can see the profit straight away. This is a live account. I just do it for fun. Let's just look. How do I call? Go back here. Where is the profit and loss? Because sometimes I do on my phone. Um, oops, just give me a second. Let me just see where can I find the profit and loss of this thingy. Do. So the first quotes, this is a normal profit and loss for when I buy in normal way. Yeah, that's a normal way without the
Yeah.
option. We go to option, I choose the option, and let's see if they show me how much is my profit and loss on my existing option. Let's say I remove this option wizard. What is this? Hmm. Okay, let me go to the home page. Maybe it's on the home page. Let's see. It's loading.
Well, I have a quick question.
Yeah, go ahead.
I mean, maybe I'm jumping ahead, but so imagine that I bought this option trading and I bought like for 250. Yeah, I've selected that.
Yeah.
But the day was like one day. For example, by end of the day, I have to hit that number, like higher than
Yes, you
403,
have
for
to hit that
example.
number. Yes.
But if I select the second option, which is 36 day, the November the 7th,
So you
November
have
the
1 month
21st
to hit
something.
that. Yeah. But it's going to
Yeah,
be more
1 month.
expensive. Yeah.
But in
I'll show
terms
you
of
later.
cost, yeah, what it should be, what it will be.
Cool. That's a very good question. But let's have a look. I think is this the one? Okay. This is what I've got. This is the options that I bought. Like, where is it? Let's have a look. 1 day, 1 hour. Yeah, it's kind of at the bottom here. Yeah, like of like yesterday and stuff like that. So you bought it here. We bought it at 15.99. The average price
Okay.
is 15. The price now is what? 25? I can't remember.
Yeah, 25 something, yes. Is it?
Yeah, 23. Yeah, the price now is 23.
23,
It says here.
2319.
Yeah. But why is it 23? Ooh, why is it 23? Let me see. Ferrari price. Ferrari stock price. This is their own strike price. But anyway, let's continue. So yeah, 23. I use 23 minus what I bought, 16 will be 8, I think. 23 minus 16 will be 7.
7.
Yeah. 7.
7.20.
Okay, cool. Yep, just around there. I just trying to understand how the profit comes like that. So you can see I make around 48% return. I put around 1.6K. I put one position, and with one position is 16. 16 times 100 is 1.6K, pretend. So I put this amount and 49%. So 1.6K, 49%. Why is it 49%? Because the price gone to 2369, which is almost half of the percentage. 1.623, right now it's 23.
Yeah.
Before was 16. So it's almost half, it's almost 50% like that. So 50%. So because I put 1.6, 1.6, 50% will be 800. So 800 is which is what I'm making right now.
Yeah.
800. So it's around 50% return. So if I want to sell this, what's gonna happen? If I
By the way, how many days you open this one for?
yesterday, I bought yesterday. Oh,
No,
how
you
many
bought it
days?
yesterday.
I put it November 21st, but I bought it
No.
yesterday.
Okay, okay.
Yeah, let me see. If I choose limit price 20.19, I could preview. So you see, if I sold this, I will get back 2319. Okay? I get back
Okay.
2319, but I have to minus how much I paid for, which is 1.6. So it's around 7,900. Okay.
Okay.
Okay, cool. So so um so yeah, so I recommend you to do at least 10 kind of like demo account on the option trading. Let me show you when you do a different price. I mean a different dates. Let's see what how much it costs on a different date. Just give me a second. Let's go to option. Go to raise, go to stock first. After you go to stock, you go to option. So for example, if we buy this now, it will be 2.95. And you guys, let's say I click order. And if I click limit of one, the amount that I will be using or I will be paying is amount is 100. It says 100 back because the limit price is 2.95. Yeah, I will be paying 295 pound dollar, okay? Because one limit price, strike price is just here, okay? This is October 17. This is like tomorrow. What if I choose November? Okay, if I choose
Yeah.
November, it's going to be a little bit more expensive. It's going to be 18.50. So the longer it gets is a little bit more expensive. The maximum loss now is 2280. So it can break even is still 402. But if I choose
Mm.
December, let's see how much it's going to be. If I choose December, it's going to be 4770. See, but in order to break even, you can just gonna get above 402. We are almost 402 now. What about February? Yep. So the longer it gets, a little bit more expensive is kind of the option. So yeah, so that's kind of what happened. Usually we recommend you to think about how long you think it's gonna get to and stuff like that. Yeah. Try to buy all three. Buy all three next time. I will buy all three. So you can try on your demo account, practice account to buy all three, and you get to see all three of the profits every day. What's the difference in their beautiful kind of like profits? Yeah, that's really really good. So the homework right now is to so that's a call options when you buy. Okay, I recommend you just to do a call options for now. I don't even want to cover the put options because buying is a lot easier to make money than selling. Selling is also the same. It's just that you want it to go down a certain price before a certain date. Okay, this is call. Selling will just be put, and yeah, put you will still be doing this buy a put option. Okay, it's still be there. You just buy a put options like that, and then you will see it still be the same. Let's just do it. Click trade. If I click that, but we're just gonna choose that one. Oh, but the thing doesn't count anymore. What is this? Order break even. Let's do one more time. Do let's do this. Do this. Come back. Break even by do this. Did this. Did this. Just do this. Yep. You see we lost $85. We lost $85. The maximum return is kind of unlimited return. It's gonna keep getting higher and higher. Put just means that you want the stock price to come down at a certain price. Yeah, you want it to come down at a certain price. So every week I will probably post one or two trades into the Telegram. It's not Telegram, Instagram group. So when you saw it, you can just go to your demo account, go to your open an IBKR. There's a demo account. Put at least 20 to 30 trades. Really understand, buy all of the call options that you can, so you can get to see how things works. Because when we come to extreme fear later on, we're gonna do that, and you're gonna see that you just need one time to make big profits to change life forever. Yeah, that's what this is all about. Make sense? It's about preparing first, that when the time comes, you kind of get ready then.
Sure. And just from your experience, most of the students, when it comes to extreme fare, do they put the 1 day on the option one? because the
Um,
36 and 64 is like
Okay,
quite expensive.
so what happened here is that during the extreme fears, during the extreme fears time, we first for all, what we normally recommend students to do, let's say extreme fears, you get extreme fears, let's say it's happened. So first for all, what we recommend students to do is that look, some different options is going to be different prices. Ferrari is a very famous stock. But if you go to Credo, Credo is a very cheap option. Let me just show you Credo. Um, so it depends on how long you think it's going to go up to. Okay, let's look at Credo for a second. Stock. If I buy, okay, Credo, we have Credo, and what else do we have? We have Credo, and then we have Palantir. Okay, let's go Palantir and see what's going on this. We've got Palantir, and then we have Nvidia. Let's try Nvidia. 182. And then we have, let's go the options for Nvidia. So you have around 244. And that if I go to Credo, for example, so we really do options. Normally, it's not just one day. It's just that normally contract option or normally expire on the 17th of October. So now you only see it for one day. Usually it lasts for quite some time. Yeah, normally it lasts for a month. So if you ask me which one do we actually buy? Like for example, yeah, this is 42, this is 430. Okay, let's go to like, oh, let's go SP 500. Let's go to SP 500. VUAA. Jeez, SP 500. There's so many. Yeah, let's do SPY. Mm-mm-mm. Let's choose the VUSA stock. Okay, that's for the stock. Let's copy the whole thing. SP 500. VUAG. Okay, let's just do Cradle. We have Affirm. We have Ren Disk. Another one called iRend. Let's see. We got iRend here. Yep. So we do the options here. Cool. So things Ferrari is so much better. Yep. So that's kind of what happens as well. So if we do this, for example, 249, that will be October 17. After October 17, because tomorrow is the expiry date, usually they don't have just one day, usually it's for a month at least. So after October 17, you will see a new contract because every month is like that. 17, 24, 31st, it's always like that. So yeah, that's kind of what happened. So you are asking what if we chose a contract that is, let's say, that is a longer one, etc., and how things is gonna be like if we choose a contract as a longer one. So yeah, so there are three things we usually do during extreme fear time. The first thing that we do is we do a normal eToro leverage, so you can own as long as possible. The second thing we also do is that at the same time we also buy a little bit of the options contracts as well. So you ask how long does it last? It depends on at that moment in time how long it's gonna last. Make sense? So we have to go to seasonality. Like for example, if November is a great time, we usually until hold till December. Usually. Yeah. So sometimes
Sure.
it's for a month, sometimes for 6 months or so, or even 3 months or so. Yeah. Just to
Yeah.
answer that question, we have to go back to check the seasonality as well.
Sure.
Nice. Cool. Awesome. So as you say, things multiply in a very beautiful way. As you said before, initially when we start small, let's say £500. And when we start with £500, once we experience one extreme fears, usually once we experience one extreme fears, let's say the price times three, and then we use a little bit of leverage times 10, you will see that we already 15K just like that. Yeah.
Yeah.
So yeah, 15K just like that. And then it keep times and you do another one, you times another 30, 450K just like that as well. So you can see, sky is the limit when students get good at this skill. Yeah, it's just about being patient and then wait for the right time to come. Make sense?
Yes, it does.
Awesome.
Thank you.
You're welcome. So tell me, how do you feel so far?
Yeah, great. Great, Revan. Yeah, if we could realize these results, I mean, like, that would be fantastic. Yeah,
Nice,
life-changing.
nice. Awesome.
That would be
Yeah,
life-changing. Um,
100%.
I have actually some existing trades on eToro, and I
Okay,
wanted to ask your opinion on those
go ahead.
because
Yeah, sounds
um
good.
so but
So I'm going to
but
tell you
yeah,
some of your existing trade right now. Now, some of the existing trade that you have on eToro is that when the market actually deep down, a lot of your shorting stocks will suddenly become positive. Okay, a lot of your
yeah,
shorting stocks. So if the price deep down will suddenly become positive. So that's
yeah,
kind of what happened. We have to go to seasonality. We have to check kind of, do we actually think the stock is about to correct or not? Yeah. So
yeah,
we don't recommend students to put too much. So we don't recommend students to put too much, because if you have, let's say, 20 shorting trades, then
yeah,
these 20 shorting trades maybe is a little bit much. 20 shorting trades. Yeah, then maybe a bit much. So you'll be like, okay, I still think the market is gonna correct a little bit. So I just chose the one that is never seen before and that's quite huge. So I just choose 10, etc. out of these shorting trades that's going on. Yeah.
yeah.
So are they on leverage or they are just X1?
I put leverage times two only.
Okay, that's
Um,
good. Don't
but
don't.
I've used I will tell you, like, I've used a Tesla actually at
Yeah.
440, 442. So it's 435 right now, but I
Yeah.
just feel that again, like, I just feel because if the market drops,
Yeah.
it could
So
drop
you
a
go
little bit.
Tesla. Tesla is a very expensive stock, and it's okay. Tesla earning release is coming in soon as well. So
Okay.
this is the thing about that. So you kind of be like, you kind of have to be like, this is the thing. You have, when you get into shorting trades on leverage like that, you have to be coming in to think about, wow, am I willing? If you don't think about you're gonna lose that money, you will almost never make that money. So you have to
Yeah.
think about, oh, you know what? I'm willing to lose whatever amount, and I'm gonna get out of the trade at a certain time and stuff like that. So,
Yeah.
mm,
But can I also tell on that I've
yeah.
put yeah, so okay, so
So if you trade like that, it's gonna be a probability game. But carry on.
what would you say about the guide wire? I mean, like, it
Okay. Yeah, the guide wire is also the same. So when we get in, we want to get in at the right time, and then it comes back down really nicely. You can see it bounced back at our support line. We have a support line
yes.
recently. Let me just show you the support line.
Yeah.
So it bounced back our beautiful support line. Let's see. Let's put a Bollinger Band. Where is Bollinger? Bollinger Band. Yep. So when we recommended at that moment in time, it came back down really, really nicely. And then
Yeah.
it bounced back off our kind of like a support, kind of a Bollinger Band kind of here.
Yes.
So
Yeah.
let's go to market screener to really see what's going on with Guy Wire. Let's go to news. Guidewire webcast insider sold shares. Name 25 top companies. First Life Insurance company. Insiders sold their shares. Sold a little bit of their shares. Expand India with Bolungoom and stuff like that. Okay, whenever we do something with stock, we have to manually plot the graph for plot the guidance graph. Yeah. So when
Yeah,
you plot the guidance graph, if you and you want to look at the targets, if Guidewire has a higher guidance, then when
yeah,
you make profits, you want to be very lucky and run. But if Guidewire, the guidance is actually higher than before, then you will be like, okay, you want to see how do you know when you're supposed to get out of the trade? Plot the earning guidance graph. This is really, really good. How to know when to get out of a trade, when the target is when you plot the earning guidance graph, and then
yeah.
you look at, okay, when it's at 300 EPS, what was the price before? Back test
Okay,
price before at a certain EPS. So let's have a look on this stock a little bit. So it's like that, like that. It's like an uptrend, like that. It's like that. It has been there since like that. Okay. Like that as well. Okay. So what I would say is for this stock, when the things comes down, it should come down like as well. This is very similar to Snowflake, I think. So when things comes down, this should comes down accordingly as well. So it's just a matter of time. So how much up do you think you can go? Let's look. As long as your leverage is not too high on this, then you will be quite fine on that. Yeah. So because stock is like that, stock they never goes up nicely. They do it in a turtle way, up down up down up down like that. Yeah.
sure.
Cool. And the next one you
Fine.
got.
Um, I've opened Meta previously when it was at 553, but it was no leverage, like times one.
Is it
It's
a
at
shorting or is
seven.
it a buying?
I'm buying. I was buying at that time, so I'm making only
Okay.
£100 on that. It's like 720,
Hmm.
but only £100 in profit. I bought it as 535 because the Meta is like quite expensive. It's 721
Oh,
right now.
nice.
Like,
Okay. So you
but
bought
I
it quite
bought
some time ago.
535.
What
Yeah,
makes you bought Meta at that moment?
because I just felt that it was undervalued, like it was quite low.
Hmm. Just
You
around there.
know?
Yeah. Okay.
Yeah.
Cool. 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 Nice. Yeah. And Meta and stuff.
By the way, I bought United Health also, like
Okay.
when you said recently. So I'm making good on that, like 300 something. I bought it United Health at 231.
Oh, okay. Okay.
Yeah.
Cool. Cool.
So
Cool.
I went at
So,
231. Like that was, I think it's one of your reels or something like I saw, and I went straight away in, and because it was undervalued, like really
yes.
undervalued. And
Yeah.
yeah, it was actually that time when Warren Buffett bought United
Oh,
Health recently.
nice.
So that
Nice.
time I went
Wow.
straight away. I bought at 231, and it's at 379. So I'm making 300 on that. And
Nice.
I just think like it would be really good to hold longer period, I think.
Exactly, exactly.
Yeah.
Those because you got a little bit of shorting stocks going on, so a lot of these buying stocks you kind of want to hold it for quite some time,
Yeah.
unless you remove a lot of your shorting stocks. Yeah. So
Yeah.
because if you remove a lot of your buyings, well done by the way. Because if you remove a lot of your buying stocks, then you only have shorting stocks. It's just a bit tricky. Yeah. A lot of these stocks,
Yeah.
you can actually hold forever. Yeah. A lot of
Yeah.
these
Can
buying
I
stocks are
ask you one thing, one particular stock?
sure.
Because it's not I'm nervous about it, but I want to know your opinion. So, recently there's like a lot of fights going on and things like that. And we talked about like in quite a lot you talked about in Tuesday classes about these companies which sell like like the fighting equipments, like the guns and blah blah blah, the
Lockheed
armor and
Martin,
stuff.
which one? Yeah.
So I'm talking about the Aero environment, and we was doing the guidance call, and you were saying like, go into market scanner, find the guidance, blah blah blah. And I found this company, and I got so excited because the numbers were telling huge, and they were sitting at 191 something, and like I saw the news on the same day, and next morning, next morning, I mean, like, before the Monday turns up, like, before open the business, they bloody jumped like 30, like $30 something. So I bought it at 231. I bought it. They are at 378 right now. So I'm making 317 pound on that. But do you think it's good stock to save it for future, like to keep it on?
I see, I see. Good, very, very good question. Very, very good question. It's the same. So let's look at this stock right now to see actually what is this about. Yeah. First of all, we want to understand what this stock is doing. So what do you say this stock is doing again?
They're into this thing, like army thing, like
Okay,
the
let's have a look. Yeah.
weapons and stuff, making
Okay.
weapons and all this. Yeah,
Cool, cool, cool. So yeah, it's
defense.
a aero defense, nice. So defense secretary signal tougher stance on buyback. Okay, let's click on that to see what they say. Aerosol, some inside the environment deploy Golden Dome for America Limited Defense. Appointment Mary deploy. So you bought it because the guidance went up big time? Is it what?
Yeah, yeah,
Did you buy
guidance
them?
went up big time. Yeah,
Okay.
like over 10% easily
Oh
and stuff.
wow. Okay, nice.
Yeah,
And you bought it like that. Okay, cool. Awesome. And aero environmental and
okay, so I bought it in June, by the way, 25th of June. I bought it
nice, beautiful. So
25th of June.
that Tomahawk June.
So if you go into June, you will see the guidance, like
Okay, I think they have another guidance in September as well, isn't it?
yeah.
So how was the guidance in September?
Oh, I didn't check that honestly.
Okay, okay. So in order
Yeah.
to know whether you want to sell or buy or something, you have to check the guidance a little bit,
Okay.
just so that if it is still increasing or if it is decreasing. If it is decreasing,
Okay.
then provided unaudited for the year, expect 19 net loss, something like that. So
Okay.
you want to compare between this and the one that we have, kind of like
Yeah.
before. Yeah, sometimes it's nice to know the competitor of this guy to see
Okay.
if the competitors is dropping like big times as well
Sure.
or going up big time competitor. And let's go to Finviz
Sure.
first, just to know the PE of this as well. Air, Y, yeah, aero environmental. So it's 11, 24, 21. Okay. At least it's growing. And so the competitors will be like Lockheed Martin, Kraton, Textron. Lockheed should be very similar to these. Okay, yeah, they're very similar. They went up really nicely, and then they stuck here a little bit in the few days ago.
Hmm.
And let's see, Textron, is it the same? Textron, yep, they went up really, really nicely since June, and then it got stuck a little bit there since kind of like a few days ago as well. What about the seasonality? Let's check the seasonality on these people. Equity, clock.com. Because sometimes the best way to know is
Yeah.
by checking. Because sometimes we bought, sometimes it's nice to know when we sell. So let's
Raymond, just a request. Is it possible if you could send me the recording of this meeting, please?
sure, sure, sure. Why?
No, just because I want to go through again and like
Okay.
option trading and
Okay,
stuff.
sure, sure. Aero environment. So you will see usually in June time after the drop, you went up really nicely
Yeah.
there. October also nicely. So you can see November and December.
Yeah.
Environmental will just get a bit tricky after November. But let's look at Lockheed. You want to look at all of the brothers, okay?
Yeah.
So you want to look at all of the brothers, all of the sectors or brothers, when to sell, when to sell. So you can see it's been really nice. June to like that is went up, which is what happened.
Yeah.
Struggling till April, which is what happened for Lockheed Martin.
Yeah.
So let's see, January struggling, February struggling, March
Yeah.
struggling.
Raymond, do I have the access of this thing? I wanted
This
to
is
have
free
access of this.
anyway. This is free anyway. You just have to zoom it in. Yeah, this is free. So zoom in like that, all the way like that. And then this is what? This is April. You can see there's always struggling in first 4 months,
Yeah.
June,
No, no,
March,
I was
April.
saying, do I have the I have the access to this thing, charts equity clock?
This
Is
is
it?
free. This is free.
Oh,
Everyone has access to it. Yeah.
oh, okay, okay.
It's free.
Okay.
So all the way down here, and then January, February, yeah, all the way down. This is tax strong, one of the, and then later on it start going up, and
Yeah.
then be tricky. So the next one will be Lockheed Martin. You want to see all of their brothers,
Okay.
similar here. You can see they are struggling in January. Lockheed struggling March, April, they're all struggling. And then suddenly in June, they started to go up a little bit, which is what it says here. In
Okay.
June, July, it started to go up a little bit. But what about environment? Um, Also quite, let's see. So struggling, November, December, January struggling. Can you see February struggling, March struggling,
Yeah.
April? And then you went like that, June, and it's a bit of struggle here. And then afterwards, the reason why it started to spike up. Why do you think it spike up? How do you have the guts to buy here in June and continues to hold through this down? How would you do that?
Being really honest, as I mentioned, that I didn't see the guidance in September. Like,
No,
I've
this is
kind of
before the
ignored. But
guidance. How do you?
sorry?
This is before the guidance. How do you
Yeah,
hold for three
no,
months?
before the guidance, because I checked in June, and June it was showing me that it was going over 10% or something. And then I quickly went through like last few of the quarters of the of the company, and I just thought that was a big change there. Like, they
Okay,
went
that's a big
into.
change. But so you
Yeah.
hold it all the way? You held it all the way the down,
So
even though
I've
it's
held it all
negative?
the way, yes. I've held
Even
it
though
all
it's
the way.
negative, you held it all the way?
I've held it all the way, yes.
Even though it's negative?
No, it just went a little bit down. So I just thought,
Okay.
even if I'm gonna lose, it's just gonna be like,
That's good.
few or
That's really
something.
good.
But
That
but I but
Mm.
I felt confidence in the stock. That's the
Awesome.
thing.
Because you go to the
Because
guidance and the guidance was going up, isn't it?
the war
Yeah.
is not, as you said, the war is not gonna stop. Like, the thing is gonna happen and stuff, you know.
Okay.
Like Pakistan is buying from Turkey, and like, like Russia buying from, it's like everything, everywhere.
Exactly.
So
Exactly.
I just thought like, okay,
And the UN is increasing their budget from 1% to around
yeah,
5% for each of the defense, the defense.
yes,
UN is
yeah,
asking, NATO is asking everyone to increase their defense from 1% to around 5%, all of the members,
yeah,
just to increase the security a little bit. Yeah.
yeah.
So I would still check the guidance, the latest one first, to see
Okay,
how much higher compared to that to there. Okay. If
yeah,
it's a lot higher, and then check seasonality. If I'm scared, then I would just get out. So guidance. So let's have a look. Environment
okay,
investor.
yeah.
Let's just see.
So far my most proud trade, actually, that was happened before I checked your videos. It was actually last year when I went into trading and stuff. I really wanted to get information. Is I went actually on internet, so I got the news about this Navitas semiconductor,
Oh
because
no, Vita Semiconductor. Okay, nice.
it was under I bought it like last year. Actually, I bought it at the price of $3 or something.
Oh wow,
So
wow, awesome.
so I have like two trades, like two small trades, like 200, $300 on that. But yeah, they're doing really good. They're actually gone to 15 or something. And because few months ago, like, Nvidia bought them, like, kind of a thing, give them a project or something to do it and stuff. So
Wow,
then that really boosted the price and stuff. So
well
yeah, that's
done.
why I'm keeping it.
Well done, well done. Cool, cool, cool.
Yeah.
Yeah, really good. You can see, if you select it's the same. A lot of our students did the same. If you do it in extreme fears, it will get super cheap. And if you
Yeah.
just buy some powerful stocks that we recommend, the right sectors, things
Yeah.
go up big time. Yeah.
Yeah.
So well done. So rather
Yeah.
than treating it as an accident, you kind of know, if you choose an extreme fears time, which
Yeah.
just means it go down big time at that moment, and you
Yeah.
choose the right sectors, things go up really, really nicely.
Yeah.
Yeah, at that moment in time. Wow, nice. Cool. So let's see if we can find this to see. Fine. Sure. Oh,
I'm making small money on BM also, BME. We
okay.
discussed in a recent like Tuesday call.
Nice, nice, awesome. Yeah,
Yeah,
that's just started only, and yeah,
yeah.
try to plot the graph so you know when to take profits on that one kind of as well. Yeah,
Sure,
so you kind
sure.
of know
Yeah, but all my shorting trades, I'm planning as soon as we hit the extreme fair, I'm just gonna
to
come out of
up.
it.
Exactly,
I'm
exactly.
gonna
You're
come out.
absolutely
Yeah,
right. You're absolutely
yeah,
right. Yeah, because easiest way to make money, the biggest way to make money you saw is during buying situation.
yeah.
So you're right. Cool. You're learning very, very deeply.
No, I'm just learning from the best, I think.
Nice.
And I and
Awesome.
I and I and I love the fact you mention all the time, like, repetition is the key and stuff. And every Tuesday call you start with like, those fundamental feed, like, points about those sentiments and stuff like this. Check this thing and stuff. And I think because it's quite repetitive, there
Yeah,
is a less chance for somebody to miss out, like, because it's important information. And you go
exactly.
by step. So yeah.
Yeah,
So it's
yeah.
quite
The
good.
repetition is everything. Yeah,
Yeah.
it's yeah. It's not about finding another thing. It's about because trading and investing is about being disciplined and willing to go all in at the right time. That's just
Yeah.
about that. Yeah, and
Yeah.
choose the right one. It's not
Yeah.
doing it every minute. It's not doing it every hour. Yeah.
No, but
So
exactly. That's why every time I think about that April the 8th, that thing, I feel that,
you cannot
wow,
forget. You cannot forget
like,
about that.
I can't forget that.
Nice.
Like, the opportunities I missed because all the top brands were like undervalued and stuff, and it was quite down. It was really good time to go in. Like, imagine if I got Tesla at 221 something at that time. Oof, that would be amazing.
Nice. A lot of our
Like,
students
and
actually got in. A lot of our students got in. Yeah.
yeah,
So yeah, because the more you
yeah,
see it, the more you feel it, the more you're gonna get it. Yeah.
yeah.
Cool. So this is I think this is the latest guidance 1.9, and this was just the one before the oops. Yep. This is also 1.9. So let's have a look. 1.9, 316. So they remain 2.8 per share, 3.6 per share. So the difference is around debt outstanding. This is 3 to 6%. This is 6 to 8%. Cool. So they definitely the revenue will be the same, but the rest of it, especially the earnings, kind of increase a little bit as well. Let's see what is number one. They say cannot provide all of that. Some okay. Yeah, so this is kind of like what happened for this stock, and you can look at every single time during October time kind of what happened. So I like to do
Yeah.
that. So on seasonality you can see this is like September, it went up nicely, and then when it comes to November there's a dip here. This is last year, and then you do the
Okay.
same thing again, and kind of November there's a
Yeah.
after that there's a dip there as well.
Yeah.
This
I
is
think I will double check. I think November is the time. Early November
yeah,
is the time
yeah.
to sell
Double
it. Yeah.
double check a little bit to go through that just to see how things goes. Yeah,
Mm.
as you said, yeah. So in order to get out of the trend, you kind of have to check the seasonality for each of them, just to see okay what's going to happen. Is it high? Is it undervalued, etc. And last thing for things that is losing money, you'll be like, oh, I can't really check whether is let's have a look historical PE ratio. Something that's losing money initially, you will not be able to check their PE because okay, this is 148. Let's have a look. I think it's negative right now. 147. You will not be able to check their PE, but you can check their PS. Let's have a look on that. Price to sales ratio. Yeah, the price to sales ratio, since the war started to go up a little bit higher now. Yeah. So that's what happened to an environmental. So we kind of want to get in when it is kind of like in the middle range, just right here. Yeah, in the middle range. So
Yeah.
it's a bit up. So sometimes if I'm what I will do is a seasonality all starts, I will either cut half of my profit or I just cut some of my profits and let the rest continue to run, and then at least I remember when it's cheap, I might get in again. Yeah, or we
Okay.
found another. Yeah, or yeah, or we just get ready to be at the right time. Okay.
Sure. Yeah.
Awesome. Well done. Cool. So the homework right now is, yeah, I want you to continue to do the 10 trades using the filter that we have. I'm gonna send you the recording so you got the
Yeah.
filters. Do the 10 trades where we want to go all in during extreme fail time, and then put some 10 demo trades on your options, and also Tuesday, come up with some trades on Tuesday so we can see whether you are doing it the right way. Yeah. Because now
Yeah.
I can see that you know how to do guidance, but you've been plotting the result rather than the guidance. All right?
Yeah. Yeah. Just one last question.
Sure.
You mentioned before the Ferrari and the other one, you mentioned about the IPO information. Um,
Yes, the
there
IPO,
was NVIDIA, like NVIDIA
yeah, it ended
competitor you
up
mentioned.
that they didn't come out. So I was thinking the IPO is going to come out, but IPO didn't come out. It still stays at private. Yeah.
Okay.
So that
Okay.
didn't come out. So I was thinking that, sometimes you have Apple come out, and there's another new company who wants to be like
Okay.
Apple, and the Apple doesn't come
So
out. Yeah.
yeah. So I think I was late in checking like I only checked today your Ferrari one on the
Oh, that's
message on
fine.
Instagram.
Yeah.
But for future reference, as soon as you put something, should we go in and put those ones
Yeah,
an
I
option trade
recommend
and
you to
stuff?
do that. If you are really scared, you can just put no leverage as well on that as well. Yeah, you can
Okay.
put no leverage on that, or you can just go to your demo on your IBKR to place
Yeah.
at least 10 before you do the real option trading. Just do as many as possible so you can compare afterwards.
Okay.
Cool.
Sure. I'll do
Awesome.
that. Perfect.
Cool. If anything, let me know. And yeah, I'll speak to you very soon then.
I will. Thank you so much, Ravan. Thank you.
You're welcome.